I'm your host, Nick Toka, and Bitcoin and the whole industry pumping like a mofo today. Long overdue, and hopefully it's just the beginning of good things to come in the near future for the industry. Bitcoin today breaks downtrend with spike toward 92,500, but who's behind the price momentum? We're going to dig into that. Bitcoin analysts target 95,000 as Trump's trade war cools. Do Bitcoin futures agree? Also, Bitcoin price prepares for a 70 to 80% gain as on-chain metrics and spot BTC and ETF inflows spike. We're going to go through our market watch, Bitcoin technical analysis, all this and so much more on today's show. Welcome, folks, to CryptoNews Global. I'm your host, Nick Toka. Today is April 22nd, 2025, episode 104. And let's get right into our Bitcoin technical analysis because I'm excited to show all the green on the screen. Voila! Up 5.5%, just under 93,000 bucks. It had hit 93.5 at one point today. Ethereum up 14%, 1792. Solana up 7%, 148 bucks. XRP up 6%, $2.21. Doge up 12.5%, 18 cents. Crypto bubbles looking at the day. First, let's go into the hour. And things are about 50-50 in the hour. So maybe things cooling off a little bit as we speak. Hopefully they pick up again overnight. The traditional financial markets were up. And if we take a look at the Nikkei, let's see what's happening in tomorrow's market. And Nikkei's up 1.7% as we speak. And the Chinese Hang Seng also up substantially for the day, so we can expect similar kind of things. It's up right now. Nikkei 1.7% and Hang Seng up 1.8%. All right, here on the charts, if I'm showing that to you well. So things are looking good for tomorrow as well. Going back to the daily chart, we've got the Bitty, as we saw, up 5.5%. Fartcoin up 15%. Sui, that's one that's kind of going under the radar, and I'm not surprised it's up 23%. It's way up on the chart. I think it's about 10th or 12th in the total market cap. There we go, 13th, and it's gained 4 positions, and that's in a day. IMX up 32%. XCN up 9%. Every single thing in the green for today. It's a nice change. Even Trump coin up 10%. Everything in the green. Zooming out to the weekly. 97% maybe in the green for the week. Fartcoin up 36%. Tau up 42%. Sui up 32%. Zooming out to the monthly. Fartcoin up 113%. XCN 62%. CRV. Curve Dow up 38%. Looking at the mining total hash rate in the blue, it's come down substantially, but still pretty close to an all-time high in terms of hash rate. And we've got the Bitcoin, as we see, jumping up. These are looking like they're going to meet each other soon here. The global M2 money supply, if we zoom into this right here, we'll see that things definitely have changed very recently, and this is spiking up. So we should also see the Bitcoin price follow. Current total market cap for Bitcoin, $1.845 trillion, Ethereum, $216 billion, XRP, $129 billion, Solana, $77 billion, Doge, $27 billion, Cardano, $24 billion, Tron, $23.5 billion. Market cap sitting for the entire industry at $2.87 trillion, with Bitcoin holding 64.26% of that, Ethereum 7.5%, and XRP 4.5% of the total crypto supply. Crypto Fear and Greed Index has jumped quite a bit today, 72 in greed. Yesterday, 47 in neutral. Last week, a 29 in fear. There are approximately 1,086 days left until the next Bitcoin halving in 2028, with 156,408 blocks left until then. Total market cap by assets globally, we got gold. It's come down a bit, $22.7 trillion. I wonder if some of that money went into Bitcoin. Apple, $3 trillion even. Microsoft, $2.7 trillion. Nvidia, $2.4 trillion. Google, $1.8 trillion. And Bitcoin has made a move. It's jumped a couple of the other assets. Currently sitting in number 6, really close to overtaking Google at $1.847 trillion. Google is at $1.59. So if Bitcoin has another good day, she will be taking the number 5 position right behind Nvidia. Under Bitcoin, we've got silver at actually sitting exactly the same, 1.847 trillion. Amazon, 1.837 trillion. 4 assets, very, very close to each other right now. Saudi Aramco, 1.6 trillion, and Meta, wrapping up the top 10, 1.26 trillion bucks. You can currently get 1,077 satoshis for 1 fiat US dollar. Going into the U.S. national debt, we've got the debt currently sitting at $36,759 billion, which equals $107,430 per U.S. citizen, or $323,049 per U.S. taxpayer. Looking closely at the Doge Department of Government Efficiency clock, we've got a savings of $349 billion since inception, about 3 months ago. And that is a savings per taxpayer of $3,104 at the moment. Some big savings, as we see with Doge every single day. It keeps climbing. So pretty interesting there. And also interesting is the BIDI, because the Bitcoin downtrend changed to a spike toward $92,500. Let's see who's behind the price momentum. Bitcoin's Easter weekend rally marks a shift in market sentiment as institutional players make their move. Will it last? The price surged over the Easter weekend, jumping 9% across the 91 threshold, currently at 93K as we saw. The strong performance diverged sharply from the stock market's lukewarm rebound and mirrored gold's bullish behavior, which briefly touched a new all-time high of $3,500. While the BTC rally and its growing decoupling from equities are noteworthy, it's the derivatives market that offers an even more bullish signal. According to the data from CoinGlass, Bitcoin open interest soared by 17%, reaching a 2-month high at 68.3. Open interest measures the total capital invested in Bitcoin derivatives, and such an uptick shows a growing bullish sentiment among traders. The market is currently in contango, a situation where futures prices, notably CME Bitcoin futures, are higher than the spot price. This typically occurs because investors anticipate rising prices and take advantage of a leveraged tools offered by exchanging, allowing them to gain greater exposure through futures than they could with direct spot purchases. This raises two questions: who is buying and why? Institutional interest reawakens, a key metric for understanding investor composition in the Coinbase Bitcoin Premium Index. It measures the percentage price difference between Bitcoin on Coinbase Pro and Binance. Since Coinbase Pro caters predominantly to US-based institutional investors, while Binance has a broader global retail audience, this premium can indicate where the buying pressure is coming from. While the first half of April showed strong retail dominance, April 21st and 22nd saw institutional demand kick in, with the Coinbase Premium rising to 0.16 per coin glass. Michael Saylor's strategy could be among those buyers. On April 21st, Ms. Saylor announced the acquisition of 6,556 more Bitcoin for approximately $555 million at an average price of $84,700 per coin. This brings MicroStrategy's total holdings to an eye-watering 538,200 Bitcoin, worth approximately $48.5 billion at current prices. On a smaller scale, Japan-based Metaplanet also added 330 Bitcoin to its treasury, pushing its total to 4855, the company's CEO announced on the same day. Meanwhile, investors who favor traditional financial instruments over direct Bitcoin holdings have also begun to renew their interest. According to the CoinGlass data on April 21st, Bitcoin ETFs recorded 381 million in inflows, a much-needed reversal after a prolonged period of heavy outflows. Since February, ETFs had suffered 33 days of net outflows versus just 21 days of inflows. While with outflows strongly dominating in volume, the recent reversal suggests renewed confidence, particularly from TradeFi-aligned investors. The dollar fades as Bitcoin rises. Yeah, we know all about this. Since tariff fears took grip of the market, institutional investors have kept Bitcoin and equities at arm's length, but something shifted over the Easter weekend. Crypto analyst Rect Capital noticed that Bitcoin has decisively broken out of its multi-month downtrend. Yeah, here it is on screen. Definitely a very slow burn, followed by a very sharp uptick. This is kind of how Bitcoin does it traditionally. Another more macroeconomic factor may be the increasing tension between U.S. President Donald Trump and the Fed Reserve Jerome Powell. Their growing rift, centered on concerns about inflationary pressure from tariffs and the Fed's reluctance to cut rates, has cast a shadow over the U.S. dollar. The U.S. dollar index, which tracks the dollar's value against a basket of currencies, has been in free fall since February, reaching lows last seen in 2022. Trump's public pressure on Powell and speculation that might attempt to remove him or other Fed officials is fueling anxiety over the Fed's independence, a foundational pillar of the U.S. financial system. The potential consequences of a falling dollar for the global economy are difficult to predict, but one thing is clear: Bitcoin stands poised to be a major beneficiary. A decentralized, censorship-resistant money governed solely by code with a fixed supply schedule, and no central authority to manipulate its issuance. A confidence in traditional monetary systems continues to erode. Bitcoin's narrative grows ever stronger. Yeah, so we've talked before about the debasement of the U.S. currency, and it seems that this is never going to stop. Every currency around the world continues to lose value, and certainly it's losing more value against the Bitcoin. And Bitcoin will continue to grow, and the fiat currencies will continue to lose their value due to money printing and debasement of each country's own currency. They're basically making everybody poorer and poorer every time they print more money, folks. So when it comes to the bitty, And gold on a lesser extent. Gold, there's about a 1.5% increase in the quantity of gold found every year. But, what's interesting with gold is what happens, I guess everybody's heard that they've got plans that who knows when, right? But with Elon at the helm, who knows, it might be sooner than later, to go land on an asteroid and mine all the gold off it. So, if the total gold supply suddenly doubles, then what's really gold worth, right? Whereas the Bitcoin, its algorithm is set, so it's never going to have more than 21 million Bitcoin no matter what. So we've got a 100% finite supply with the Bitty, and because of that, it really goes, there's only one way for it to go. It's a basic supply and demand. It is going to go up. Now, as we talked about yesterday, we're looking at the next phases of the Bitcoin, and this was before the pump. We timed it just perfectly, right? So Bitcoin was sitting at around, first 82, 83. First, before that, 77, then sitting around 82 for quite some time. And we said it really needs to get, it went up to 88, and we said it needs to get over this 92 hump and stay there. And then the next step after that is going to be 95,000. And then the next step over that will be over 100,000. Once we get over 102, then the new price discovery all-time highs are definitely in play. And we've seen historically that this can happen in days. So let's hope that continues. Bitcoin analysts target 95,000 as Trump's trade war cools. Do Bitcoin futures agree? Bitcoin soars to 91.5, well, 93,000 as stock markets rebound. On hints of progress in Trump's trade war, are Bitcoin futures traders drinking the same Kool-Aid? Yep, I think they're smoking the same ganja too. Bitcoin surged to a 45-day high above 93K. I wonder if it's more than a 45-day high since they printed this article. On April 22nd, upward movement coincided with gold reaching a new all-time high. The price gains reflect interests investors have over a potential economic recession amid ongoing global trade tensions. The tides are shifting, but does data support a Bitcoin rally above 95,000? In neutral markets, Bitcoin futures premium typically ranges between 5% and 10% to compensate for the longer settlement period. At present, the annualized premium stands at 6%, which is not considered particularly bullish, even though Bitcoin appreciated by $6,800 between April 20 and 22nd. Some analysts interpret this as a sign that Bitcoin is beginning to decouple from the stock market. Yes, we want this decoupling. Although the stock market, when it opened, maybe it followed the Bitty, right? Because the stock market's been closed for days for Easter weekend, but the Bitcoin has been running 24 hours a day. Traders, PTSD could emerge around Bitcoin's $90,000 zone. Part of the skepticism among traders stems from Bitcoin repeated inability to sustain levels above 90,000 in early March. For example, Bitcoin tested the 95,000 mark on March 3rd, only to fall to 81,000 the following day. This inconsistent performance since the 109,000 peak on January 20th has contributed to a lack of conviction among bullish investors, especially as gold has continued to set new all-time highs during the same period. Currently, Bitcoin is trading at 16% below its all-time high, a figure that closely mirrors S&P 500's decline of 14.5%. This suggests that the recent era of excessive risk-taking may be behind us. Notably, even at its lowest point below 75,000, Bitcoin's 32% drawdown was less severe than those experienced by Nvidia, Amazon, Facebook, and Tesla. Comments from the U.S. Treasury Secretary Scott Bessent on April 22nd contributed to easing investor concerns. As reported by Bloomberg, Bessent described the ongoing tariff standoff with China as unsustainable, suggesting an increased likelihood of de-escalation. In contrast, U.S. President Donald Trump took to social media to assert that the U.S. Federal Reserve Jerome Powell is hindering economic growth by not reducing interest rates. We just talked about that. Bitcoin's gains contrast with investors' shift to government bonds. Yeah, they're shifting away from government bonds is what's happening here. Regardless of where the blame lies for the subdued economic growth in the United States, demand for short-term U.S. Treasury has risen, as evidenced by the yield on the 2-year note declining to 3.8% from 4% a month earlier. Essentially, investors are accepting lower returns in exchange for the perceived safety of government bonds. Against this backdrop, Bitcoin's 6.3% price increase over the past 30 days stands out as particularly notable. To determine whether these recent gains have affected professional traders' sentiment, it's important to examine the Bitcoin options market. If traders expect a correction, put-sell options tend to trade at a premium, causing the 25% delta skew metric to rise above 6%. Conversely, bullish sentiment pushes the indicator below 6%. So here we are, way below 6%. Currently, Bitcoin option market reflects limited enthusiasm following the recent surge to 91,000, with the 25% delta skew indicator at -2%, which remains within the neutral range. According to this metric, the last period of bullish sentiment occurred January 30th, when way back, not even shown, when Bitcoin traded near 105,000. Therefore, there is no clear evidence that large investors and market makers are anticipating a sustained rally above 95,000. Despite some weak macroeconomic data, market participants expect a relatively strong first quarter earnings season. FactSet reports that the Magnificent Seven stock companies are projected to achieve earnings growth of 14.8% for the first quarter compared to the previous year. While Bitcoin still has a reasonable chance of revisiting 95,000 or higher, many traders appear to be waiting for further developments in the U.S.-China trade war before placing additional bullish bets. So more wait and see. What I can say for sure is if the price drops, it's another buy the dip moment. I've been buying the dip every time it had gone to 70, under 80K, 77, 76. I definitely was buying the dip. And because of that, even recent purchases, I'm way up in the green now. All it took was a little bit of a boom, and things are looking pretty. Whereas, let's say you bought today and said, "Oh yeah, Bitcoin," like people do, right? If the prices go down tomorrow, you're going to be waiting a long time. Don't sell, because the price will come back up eventually. But you might be waiting quite some time. So whereas if you buy on the low, or if you dollar cost average, you put in the same amount of money every month or every week, for example, for a sustained period of time, you're generally then getting it at the lowest price because you're averaging out all of these highs and lows because the prices go up and down every day. But if you buy a sustained amount over a long period of time, you average all that stuff out and you end up with, a even curve instead of this up and down stuff. Bitcoin, according to some other analysts, price is preparing for a 70 to 80% gain as on-chain metrics and spot BTF inflows spike. Bitcoin bulls return as Bitcoin price reclaims the $90,000 level, leading one analyst to predict an 80% gain from here. Bitcoin price has been in a persistent downtrend since January, but on the April 22nd surge past 91,000 marks the first high breakout of the year and potential start of new longer-term uptrends. The higher high pattern occurred after Bitcoin moved above its previous lower high and resistance at 88,500, but the real factor that will keep price afloat is buying volumes in various cohorts of the Bitcoin market. The U.S. spot Bitcoin ETFs recorded total net inflows of $381 million on April 21st, levels not seen since January 30th. And here is the chart it does go all the way back to January 30th over here. Daily inflows, there were quite a few outflows for quite some time there until we've gotten now again to this point in time where we're at right now. A decent spike in the price and in the demand going into the spot ETFs. A rising spot Bitcoin inflows along with Bitcoin increase in price point to a possible resurgence in institutional demand for Bitcoin, and the change in trend from the ETFs could offset the selling pressure that has put a cap on Bitcoin price for months. However, retail investor demand buy volumes between 0 and 10,000, I'm thinking this means Bitcoins, remained below zero, which suggests that low volume buyers are not back yet. No, it doesn't mean Bitcoin, it means dollars. Retail investors, so the small guys, the common folk, buying between $0 and $10,000 worth of the bitty. Over the past year, these investors have lagged behind BTC price breakouts, but they strengthen price momentum once the investor volume turns positive. CryptoQuant community manager Martoon highlighted that the present rally is leverage driven rather than spot volume driven. Glassnode data also pointed out that the Bitcoin future open interest increased by 2.4 billion in less than 36 hours. For Bitcoin price to sustain a strong position above 90,000, the current discrepancy between futures traders and retail traders needs to decrease. From a longer term perspective, Dior crypto founder Hitesh Malviya said Bitcoin could gain 70 to 80% if it maintains a MVRV ratio of 2 for the next 6 weeks. The market value to realized value MVRV ratio, a key on-chain metric, compares Bitcoin market cap to its realized cap. The value of coins at their last transaction price. Historically, a MVRV above 3.7 often signals overvaluation in market tops, while values near 2 have preceded strong price rallies. So, currently showing MVRV at 1.9. So this is in the zone where it's talking about price rallies. So hopefully this holds true, and hopefully we do see 70 to 80% gains from here. This is more like what I would expect the Bitcoin price to be already at this time in the Bitcoin halving cycle. It would make sense for it to be up into the 130, 150 zone, and as many people dub it, the banana zone. The banana zone is coming, friends. We just have to be a little bit patient. All the indicators are pointing toward a increase in price for the BTC. We've got the if we go to a 1-year ISM, the manufacturing index, we see that in March. I guess it's fallen a bit, but generally, if we get over 50, when we get over 50, this is US, by the way, this will certainly make a dent on Bitcoin. Bitcoin follows this closely, and if we go historically, we can see pretty closely that the BTC and the ISM manufacturing index follow each other. So let's go with the halving event. So here we've got 2016, the year after the halving, 2017, and the cycle peak was around November of 2017, and here we see the ISM also peaking pretty much around November of 2017. Let's go to the next halving after that in 2020. Happened pretty much in April, I believe. I think it was a little earlier in March in 2020. And again, the year after the halving is always traditionally, historically been at the cycle peak. So here we have the year after the halving, 2021, and the cycle peak price was again right at the end of October, which brings us right about here. So we see that the BTC definitely follows this, and I do expect that this little downtrend here, shown by this graph, will definitely turn, and it's going to then pump up, and the Bitcoin will follow. When we go into the M2 money supply, we already looked at this earlier, we also see that, if we zoom in a bit, we see that currently the M2 global money supply, and this is from 21 central banks around the world, will and already is starting to spike. So again, Bitcoin follows this so closely. We've gone through this before. Check out how closely the BTC, the Bitcoin is in white and the M2 money supply is in pink. So check out for all the way from 2013 here how closely they follow each other. So another indicator for the BTC, and we've mentioned many times that so here's the M2, so the money supply around the world is on the way up. When that goes up, the BTC will also go up. We know that the states are going to start printing more money, I should say. We know that the EU has already said they're going to print over €1 trillion. China, we already know that they need to start printing money because their real estate market crashed, and their current interest rates are at 1%, so they can't do anything more in terms of lower interest rates. There's only one thing for them to do, and that would be to print more money, debase their currency. It's all they can do, right? They have to keep the interest rates low, print more money, and it's the only way they're going to really stay afloat. US, they want to bring manufacturing back home, and in order to do that, to kind of build the infrastructure that they want to do this, they are going to have to print more money. So everywhere around the world, they are printing and printing and printing. As they do that, it is very good for the Bitcoin. The Bitcoin, on the other hand, is a finite, limited supply. The supply won't change. The fiat money, the supply is constantly changing, constantly more money being printed. So as your purchasing power of your fiat money decreases, the purchasing power of your Bitcoin will increase. So that's a good way to look at it. I've mentioned this previously. So if, for example, Bitcoin was, we'll call it $100,000 just for ease of math, and the, let's say it's $100,000 today, and the total money supply doubles, the M2 money supply doubles. So then the Bitcoin will technically then be $200,000. Even though the price of the Bitcoin wouldn't have changed one bit, the purchasing power of fiat money would have decreased by 50% because there would be twice as much money. So easy way to look at why the M2 money supply and the increased money supply and money printing around the world affects Bitcoin. Lots of money out there, folks. We keep saying this. There is over $900 trillion of assets around the world. So go out there and get yours. Money is abundant. It's time that's scarce. So do spend your time wisely. Spend less money than what you earn. If you suddenly start making more money, start saving more money. Don't just start spending more money. And start saving, investing when you're young. And ideally, you can retire when you're 40 or 45 in your prime. If you've got a great idea, jump on it. Start with your great idea today, and things will slowly come together. Even if you're not ready, start with your idea, and you'll be surprised at where you can bring this thing, and you'll feel the satisfaction that you at least tried, even if it doesn't work out for you. I'm on a path to have over 500 subscribers this year, and folks, it would be great if you join me on this ride. If you enjoy what you hear and see, please do share, like, comment, and subscribe to this video, and we will see you on the next stream. Folks, thanks so much for joining.